Hi all and welcome to our weekly report. A much quieter week is ahead of us, which starts with fairly light calendar on Monday. The main point of interest for Monday is US retail sales data. US Consumer Price Index, UK manufacturing and industrial production data, in addition to another UK Parliamentary vote on Brexit, are all due on Tuesday. US PPI, durable goods data, and UK budget report, in addition to US crude oil inventories, are due on Wednesday. German CPI data and UK Parliament is also expected to vote on potential Article 50 extension on Thursday. The week will finish on Friday with Bank of Japan interest rate decision and monetary policy statement, in addition to Eurozone Consumer Price Index. Now, let's take a look at few markets. This is the intraday price action for US dollar index. It appears to be quite nice and bullish with a breakout above that 96 area that we were talking about last week. The price action is currently supported by a couple of rising moving averages and a couple of rising trend lines. The key point of interest for the bulls is at 96.50, 96.20 zone. Controlled pullbacks into that zone and controlled rallies from that area are supportive of additional bullish sentiment, potentially targeting additional resistances towards 97.30, 97.50, possibly even 98 to the upside. Alternatively, only a dip lower and end of day close below 96.50, 96.20 would potentially open up the way for a deeper retracement and retest of additional downside support towards 95.76, 95.43. This is the price action for euro dollar. Euro dollar appears to be under some severe pressure with this price action that creates a sequence of lower highs and also lower lows. We saw some corrective pullbacks as a result of this rising wedge forming and the mini topping head and shoulder pattern and the retest from that breakout level of last week at around 1.1340, 1.1390. Now, the current price action came down to 111.80, 112, and we are correctively rallying off those levels, which could be considered to be a short covering. Now, the initial upside resistance is at 112.90. Where if the price does go there and starts pulling back lower from that level, bears will still be in control, potentially targeting 112 to the downside, 111.80, 111.40, possibly even 111 to the downside. Alternatively, only a confirmed breakout and end of day close above 112.90 could potentially open up the way for a retest of additional upside resistances towards 113.34, possibly even 113.77. Only the end of day close above 113.77, 113.80 would negate the current intraday bearishness and open up the way for a spike higher towards 114.60, 115, 115.40. Cable appears to be consolidating in a sideways channeling action as well. We saw considerable US dollar strength over the past trading week. The key level for us to watch is at the current levels at 1.30. Nice and round number, but also in addition to all of that, it would be a fib retracement. So if we take the swing low, here dated 14th of February all the way to a current swing high, that 1.30, in addition to being a previous high and low here, therefore horizontal, it's also 61.8 fib retracement of this impulsive move higher. Now, bulls appear to be in control above that level, potentially targeting a breakout higher above 130.70, 131. Only the end of day close above that level could open up the way for a retest of additional upside resistances towards 132, 133.75, possibly even 135 to the upside. Alternatively, either a rally and rejection or a controlled pullback from the current levels are initially supported down here at 112.90. Confirmed loss of that level would negate the current bullish outlook, potentially targeting deeper retracement towards 112.80, possibly even 126.14 to the downside. This is dollar Japanese yen. Dollar Japanese yen is moving quite nice and higher with a sequence of higher highs and higher lows. We had a corrective pullback towards 111 level again, which is that rising support trend line, and also a previous resistance, which was a breakout level. A pullback in dollar yen was indicative of US indices pulling back over the past trading week, and this is a safety play. Basically, investment money is being taken out of speculative investments like stocks and being pushed into gold. We'll talk about it later, and also Japanese yen. So this is a US dollar weakness and Japanese yen strength. Now we are coming to a support level of 111. Bulls appear to be in control above that level. If that support level holds and we see a breakout higher, the initial upside resistance is at 111.45. Confirmed breakout above 111.45 and the retest of that level from above would be supportive of bullish sentiment, potentially indicating retest of additional upside resistances towards 112.55, 113, 113.20 to the upside. Alternatively, only a dip lower and end of day close below 110.80 would negate the current bullish outlook and potentially target deeper downside support towards 110, 109.73. This is Euro Sterling. Euro Sterling yet again is back towards that spot 86 magical level, weekly and monthly resistance areas. This potentially could morph into a bear flag. They tend to break to the downside if they're seen in a clearly defined downtrending market, but we need more confirmation for that. The confirmation would be a complete sell-off and loss of that spot 86 area, and dip lower towards 85.50, 85. Only a confirmed loss and end of day close above spot 85 would open up the way for the retest of deeper downside support towards spot 84.30, 84, possibly even 83.60, which would be 200 week moving average. Alternatively, either a pullback into 86 and a rally or a breakout from the current levels is initially capped by spot 86.80. The end of day close above spot 86.80 would negate the current bearish sentiment and potentially indicate a move higher towards 87.77, spot 88. This area here, spot 86.50, is also important from the fib point of view. So if we take the swing high to the swing low, this 86.50 area is also 38.2 fib retracement. So therefore, corrective move of this impulsive move lower. Now, the other thing that I want to talk to you about very quickly is dollar CAD. Dollar CAD appears to be breaking out higher, so therefore US dollar strength. Dollar CAD is currently supported by a couple of rising moving averages. The initial downside support is at one spot 33.60. Bulls appear to be in control above that level, potentially targeting 135, 136, 136.20 on the upside. Alternatively, either a rally and a retest or a gradual move lower, and the daily loss of 133.60 would negate the current intraday bullishness and potentially open up the way for a retest of deeper downside support in this zone here, 132.30, 131.60. Dollar Swiss is the next on the menu. We are coming fairly close to that very important parity level. This appears to be an attempted breakout and a pullback. The parity level was important resistance in the past. If it holds and bears return, then the end of day close below parity would open up the way for a deeper retracement towards spot 99.70, 99.35, possibly even 98.80. Alternatively, either a shallow pullback and a breakout or a gradual rally higher with respect of this rising support trend line would open up the way for a retest of this swing highs at one spot 0.12, possibly even one spot 0.16, maybe even higher over the coming days and weeks. The next thing that I want to talk to you about is gold. Gold had a oversold bounce back in something that potentially could form into a cup and handle pattern, or the rounding bottom as it's known. We are currently back or very close to 1300 level, that magical level that played resistance and support in the past. Continuous rally higher. would target 1306. Only a breakout and end of day close above 1306 would open up the way for the retest of higher upside resistances towards 1320, possibly 1340, 1346, 48 on the upside. Alternatively, either a rally or and rejection, or a gradual pullback from the current levels is initially supported by 1280, followed by 1270, 1263. The last thing that I want to talk to you about is crude oil. Crude oil is ranging sideways at the moment. The mid-range is at 56.45. The initial downside is supported by 54.90. Upside is capped by 57.75. Keep an eye on that crude oil inventories on Wednesday. A bullish reaction would cause the end of day price rallying and closing above 57.75, and that would open up the way for the retest of 59.30, 60 plus, or maybe even 61, 62 to the upside. Alternatively, either a rally and rejection or a controlled pullback from the current levels and end of day close as a result of supply and demand data with the inventories or something coming from OPEC, or maybe even a dollar strength. And the end of day close below 54.90 would negate this possible bullish breakout, and this sideways consolidation range would turn into something that might look like a triple top, with the neckline being here at 54.90. Loss of that level would target 53.60 as initial downside support, retest from underneath to confirm the existence of this stopping pattern, and then gradual move lower towards 53, 52, 50, 74 supports. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.